All right, so today we're going deep on Grok Trade's daily stock market summary for April 7th, 2025.
Yeah.
Pretty wild day in the markets. So where do we even begin with this one?
Well, I think the U.S. stock market is a good place to start. Grok Trade is talking about a major gap down at the opening bell.
Yeah, what was that all about?
Basically, the prices just plunged as soon as the market opened, way lower than where they closed the day before.
Oh, wow, so like a huge drop right out of the gate.
Exactly. And then, get this, they actually recovered some of those losses during the day.
Intraday recovery, right?
Right. So it went down, then back up, all in one day.
Talk about a roller coaster. Yeah, that's got to be nerve-wracking for investors.
Definitely adds to the stress. But it's a good example of how volatile things are right now.
You said it.
Yeah.
And speaking of volatility, the VIX hit 60. That's insane.
Yeah, I mean, that basically screams fear in the market.
Like maximum anxiety levels, right?
Pretty much. The VIX measures expected volatility, and 60's high, like really high.
Yeah, so Grok Trade's advice to day traders to scale back their positions makes a lot of sense.
Oh, absolutely. In this kind of environment, you don't want to be overexposed.
Not at all. So was this just pure panic selling, or is there something more to it?
That's where it gets interesting. Grok Trade's technical analysis suggests a potential bounce after this kind of intense selling pressure.
A bounce meaning prices could go back up.
Yeah, it's like a spring being pushed down. It wants to snap back up.
Okay, so how does that work with all this fear?
Well, they're calling it capitulation. Basically, everyone who wanted to sell has probably already sold.
So kind of like a bottoming out.
Right, and that can create opportunity for buyers to step in thinking prices have dropped too far.
Interesting. So even in a crazy day like this, there might be some hope for the bulls.
Exactly. Now let's zoom out and look at the bigger picture. The economy Grok Trade describes it as a mixed bag.
Mixed bag, huh?
Yeah.
What does that even mean?
It means there are both positive and negative signals, which honestly isn't all that surprising these days.
True. So what are we seeing on the plus side?
Well, job numbers stayed steady, which is usually a good sign.
Yeah, that's definitely a positive. But then there's Fed Chair Powell talking about inflation from tariffs.
Right. He mentioned those larger than expected tariff ripples, and economists weren't exactly thrilled about it.
No, I bet not. Tariffs and inflation don't usually go well together.
Not really. See, tariffs make imported goods more expensive, and those costs often get passed on to consumers.
So basically everything gets pricier.
Exactly. And that's what they're worried about, inflation eating away at people's purchasing power.
So we've got job security, but potentially higher prices. It really is a mixed bag.
Absolutely. And on top of that, there are those concerns about future growth.
Right? Grok Trade mentioned Goldman Sachs increasing their odds of a recession to 45%.
Yeah, that's a pretty big jump. And it seems like those tariff concerns are playing a role.
So even with stable jobs, people are worried about what's coming next.
It's that uncertainty that's driving those recession forecasts.
Yeah.
It makes businesses and investors hesitant.
So it's like a tug of war between present stability and future worries.
Exactly. And then we have the bond market, which is acting kind of strange.
Strange how?
Well, the 10-year Treasury yield actually fell to 4.00%.
So while stocks were going haywire, bonds were getting more attractive.
Exactly. It's that classic flight to safety. When things get risky, investors look for safer havens.
And government bonds are seen as super safe, right?
Exactly. Especially U.S. Treasury bonds, they're considered one of the safest investments out there.
So it's like people are parking their money in bonds until the storm passes?
Pretty much.
Yeah.
It suggests a lack of confidence in the stock market and the economy as a whole.
Okay, let's switch gears to crypto.
Yeah.
How did Bitcoin handle all this chaos?
Interestingly enough, it actually managed a small gain today.
Really? Even after that big sell-off on Sunday?
Yeah. It seems pretty resilient.
That's kind of surprising considering how much everything else was down.
Right. You'd think Bitcoin would be more sensitive to these kinds of market swings.
Especially with all the talk about regulation and stuff.
Definitely. But Grok Trade pointed out a potential technical formation on Bitcoin's daily chart called a rising wedge.
A rising wedge. Now, I'm not a chart expert. What does that mean?
Think of it as a pattern that slopes upwards but gets narrower as it goes.
Okay, and why is that important?
Well, traders watch these patterns because they can sometimes signal a potential downturn.
So even though Bitcoin is up today, it might not last.
That's the idea. But Grok Trade was careful to say it's still early to confirm anything.
Right, these things can change quickly. And what about gold and silver? How do they do?
They actually both declined, which is unusual.
You mean gold didn't go up when everything else was down?
Nope, it actually took a pretty sharp hit. Silver, too.
Wow. That's not what you'd expect from a safe haven asset.
Right. It really highlights how unusual today's market is. Almost everything was down except for bonds.
So bonds are the new safe haven now, huh?
It seems that way for the moment. It's all about risk aversion. Investors are seeking stability above all else.
Okay, so to sum up, we had a wild ride in the stock market with a potential bounce on the horizon.
Right.
The economy is a mixed bag with job security but looming inflation concerns, and Bitcoin is holding its own while gold is taking a beating.
Exactly. It's a day of contrasts and contradictions.
And that unusual strength in bonds is definitely something to keep an eye on.
It tells us a lot about how investors are feeling right now.
Grok Trade also mentions their mentorship program for anyone who wants to learn how to navigate these choppy markets.
Yeah, they focus on technical analysis and risk management, which are super important in this kind of environment.
Especially if you're a day trader trying to make sense of all this volatility.
Exactly. They say they've got experienced mentors and a supportive community, so it could be worth checking out.
Lots to think about. So keep an eye on those charts, do your research.
Yeah.
And as always, thanks for joining us on the Deep Dive.
See you next time.